Nigel, who is currently at the sidelines of the Motilal Oswal conference. With him is a special guest, a special conversation lined up for you. Take it away, Nigel.
Well, thanks a lot for that, Mangalam. Indeed, a very, very special guest. We have with us Mr. Vinod Bahety, the CFO of Ambuja Cements. Thanks a lot, Mr. Bahety, for finally speaking to us here at CNBC-TV18. Well, before we get company specific, let's talk about the industry. The last few days, there has been this buzz that finally we're seeing some kind of cement price hikes. From an industry perspective, it's a little bit confusing, right? Because in the monsoons, we don't normally see a price hike. But has there been a price hike? And by when do you expect this price recovery to actually take place? Because that's been fading away in the last few months.
No, thank you, Nigel, having me on the show. So, of course, industry is in a very exciting phase, and we have seen lots of good consolidation happening here. First, on the volume part, Nigel, we are seeing a good volume uptick now. And June quarter was a little dull given the rains and given the election seasons and all. But we are now seeing a good volume uptick. Coming to the price part, it is still on the modest journey, but we see that coming quarters from September past, we will see a good improvement on price as well. Industry is overall in a good momentum. Price will be driven by the market factors, but of course, the market factors are looking positive from September onwards.
All right, but in the last 5-6 days or so, we have heard that particularly in South and East India, there's been an attempt to push prices by around 10 to around 20 rupees. Can you confirm that, and how much of that will get absorbed?
Their industry keeps doing those attempts as of now, but we haven't seen any material improvement over there. So when you try for 10 or 15 rupees, you may get say 20-30% improvement over there. But the real, as I said, momentum will come post September, hopefully so. Okay,
all right. So you're optimistic on pricing, but what you said is that volumes are picking up, which is encouraging. What kind of industry growth are you working with, for the coming fiscal? And given the kind of volume push that y'all are seeing as a group, how much can you outpace the industry growth?
So in terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpassing the industry. So far as if I look at the larger horizons in next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. The two important drivers of the industry, both say infra and the real estate. So real estate almost is 60-65%, infra is 20-25%, rest is commercial. These major industry drivers are in a very good phase of expansions. Okay. And on top of it, industry is also getting younger. Yes. Like if you see, for example, industry is going to put another 200 million tons of capacity. As of now, we are, as an India level, say almost 600 million tons. And this 200 will make the industry much younger. Industry is becoming more cost conscious, ESG conscious. So the industry is getting younger. So I always say that now this is like a 100-year-old industry getting younger in this next coming decade. So you will see a good momentum.
Indeed. On capacity, y'all are around 89 million tons odd, and you've drawn up that roadmap that by 2028 you go to around 140 million tons odd. What kind of industry capacity would you like to have? I think you're currently mid-teens, and you'll been talking about 20% odd. Tell us the outlook.
Yeah. So as of now, our market share is overall around say 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at say from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
Got it. Since you're talking about growth and about capacity addition, what about Penna Cement? That came out of nowhere. You went ahead, you acquired an asset that people speculated was on the block for years, but you'll manage to close that out. Now, how do you see the ramp up of this asset? Because utilization levels were low. You had, it was not making too much of money. So, say in the next 2 years, how do you see this asset ramping up?
So, in fact, Nigel, Penna has been a great acquisition for us. As you know that we announced on 13th of June, and we achieved the closing on 16th of August, almost like in say 10 weeks time. And as we speak, already productions have started and dispatches have already started. The assets are great, and while we did a thorough DD, but when we are actually now live running the plants, we see that the assets quality are really good.
Okay.
Our marketing and sales people have given us a commitment of almost achieving 8 lakhs volume per month, which is almost like 9.6 million tons. But without giving much optimism over there, I am strongly believing that 60 to 70% we will be achieving capacity utilization in this year. And as I said, that next year we should be hitting almost 80%. Penna, as of now, we have 10 million tons, and under construction is the Krishnapatnam GU, which will add another 2 million tons.
Okay.
And then the Marwad integrated unit, which is now the whole capex cycle for both these projects. Penna was struggling on those financings, but now with Ambuja strength, this should be achieved much earlier than expected closing. So we should be hitting 14 million tons for Penna, another say 12 to 15 months time.
Okay, so 60-70% utilization levels in this year
itself.
and 80% next year.
Absolutely.
When does the EBITDA per ton try to catch up with what you're doing as of now?
See, in good times, Penna used to achieve a EBITDA of 700 rupees a ton.
But that was a long time ago.
That was, let us say, 2.5 or 3 years back.
Yes.
And with the strength of investment, because we see some areas of improvement, like in form of say WHRS or the AFR or the debalancing in terms of the overall capacities and all. So we see that this 700, which was say 3 years back, we should be first achieving that, because in last say 2 years they have been achieving less than say 400 rupees a ton.
Yes.
So we should be first hitting that 700 rupees a ton, and then we should be getting closer to 1,000 to 1,200 rupees a ton.
By
and
when?
then that we should be achieving in say almost in 26, 27 kind of thing. And then our desired levels of 1,500 with the power of investment. So we are already working on green power coming to Penna and
Yes.
so on and so forth. And the sea logistics, for example, we will be able to optimize given the ports and overall say synergies what we have in the group.
Yeah.
So I think we should be hitting 1,500 our desired levels. We have anyways given by 2028, that is the overall say EBITDA we want to achieve.
Yeah.
But the first level is to achieve 700 rupees a ton, and then followed by 1,000 rupees a ton.
Got it. And there's cost saving you're working with is around 500 rupees, I think, for the next few years, right? For the entire group.
For the entire group, in fact.
500.
We are looking at almost like 550 rupees a ton.
For it to save it. Got it.
Yeah.
All right. You know, a couple of quick questions before we let you go, Mr. Bahety. Now you have 3 assets, right? 3 cement assets, which are listed. ACC, Ambuja, as well as Sanghi. When do all of them come together? First, let's focus on the merger between ACC and Ambuja. And is it on the cards sometime soon, say in the next fiscal?
Nigel, like I think so. Like whatever when it will be there, we will make it to the markets. But as of now, no such plans. But of course, we have already started our journey of consolidation.
Okay.
The first one was the cement business of Adani Enterprise, which is Adani Cementation Industries Limited, which is under the merger process of with Ambuja.
Got it.
But as and when we follow the other steps, we will definitely inform.
You know, because the street is wondering why do I have 3 listed entities, right? Sanghi should get folded up in one of them, and these 2 as well should come up.
Yes.
In the next 2 to 3 years, do you think that will be the plan, that we'll have one listed company, Adani Cement? Should that be a possibility?
Ideally, that should be the way forward. But right now, with Penna also on the fold, so the whole focus is to optimize the businesses.
Yeah.
Our idea is to hit the volumes and hit the EBITDA. That is the foremost priority.
Okay.
But this corporate restructuring definitely will be also worked upon.
Within 3 years?
Nigel, apologies. But I don't want to put any comments on that. It will be speculative.
All right, you've answered a fair bit of our questions, Mr. Bahety, so let's clear the air on everything. There is this rumor or this buzz that the promoter entity, after increasing stake in the company, that's Adani, they could be looking at going ahead and maybe selling some stake. There is some buzz in the market, so I wanted you to clear the air on that. Either ACC or Ambuja. Ambuja is where the buzz is, that there is potentially a large block. You want to deny it? You want to confirm it? Is that a possibility?
Well, I would not comment anything on that, because that will be directly looked upon by the family office. So at the business level, at Ambuja, ACC and Sanghi level, I will be able to answer all your questions.
So I should not take that as a denial or a confirmation.
I would say that I'm not aware of it, and there would be appropriate people to answer that.
Well, Mr. Bahety, before we let you go, final question. Inorganic growth is something everyone is looking at and talking about. Few assets that I'll name, you know, you can deny it point blank if you're not interested. Orient Cement?
I will just generally answer you, Nigel.
Orient, Nuvoco, and Heidelberg. Three assets.
I would be open to all the assets.
Yeah.
We have always said that we are working on many opportunities, but as we always say, we are a buyer at a right price. And as a strategy, both organic and inorganic, we are open to. And good thing is our balance sheet is very strong.
Yeah.
And sitting on a good pile of treasury to consumer transaction.
But Mr. Bahety, give us some more insight. Is it going to be, could you give us geographically what will be the preferred location?
Okay, in terms of geography, see, we are fairly well balanced.
Yes.
But when these are like known in the investor publications, whatever we do,
Central
India is something which we are like 8 or 10%. So like obviously that would be my choice to look at say Central India to improve that. South was somewhere we were lagging and we bought Penna and we increased our capacity share over there also. So as of now, but having said that, all regions, right from eastern to northeast to center, we are open to at a right price.
All right, Mr. Bahety, thanks a lot for speaking to us here on CNBC TV18. We wish you well and we'll hold you to those numbers the next time we chat as well.
I look forward to.
That's it from us here at the conference. Mangalam, back to you.
All right, incredible conversation out there, Nigel. You know, when they're talking about trying to put all the Adani cement companies under one basket itself, not speaking much about when they will try to restructure, but the eventual strategic roadmap is lined out. Also looking for some assets, while in all geographies of the country, a particular focus in the central part of the country with the right price as well. They do have the balance sheet for the same. Let's see how that pans out. Take a short break. More